Good evening. Nifty slipped less than 1% this week, but the more important change was beneath the index. Fewer stocks participated as the week progressed. Volatility stayed low and institutions remained net buyers, so this was gradual weakening, not panic. Monday was almost flat, but gains in private banks and mid-caps masked weakness in PSU banks and the broader market. By Tuesday, the weakness had spread. Nifty fell 0.46% and only 13 of its 50 stocks rose. Tuesday's expiry initially suggested that closing auction risk was fading. The auction lifted Nifty by only 22 points, while the 24,450 call and put pair lost almost two-thirds of its value in the final 15 minutes. Then Wednesday broke that pattern. After several smaller closing auction moves, Nifty jumped 74 points in the auction. That mattered because SENSEX Expiry followed the next day. The sequence suggests Wednesday reset expectations for Thursday. As 3:15 approached, option prices implied much more uncertainty than at the open, and the at-the-money SENSEX call and put pair still cost about 124 points. Traders were still paying for another auction surprise. They got one. The closing auction lifted SENSEX by 225 points. A 78,000 call that had traded at 2 rupees and 5 paise minutes earlier finished worth almost 80 rupees. For option sellers, the lesson is simple. An option that looks almost worthless before the auction can become a large settlement liability minutes later. Friday confirmed the narrowing. Nifty barely moved, yet roughly two-thirds of Nifty 500 stocks fell. The SENSEX auction still added another 87 points. This was not a broad sell-off. Mid-caps and realty still gained, but banks, autos, technology and metals weakened, leaving the market increasingly dependent on fewer pockets of strength. Institutions remained net buyers despite the weaker market, purchasing about 10,500 crore rupees combined. That may have cushioned the fall, but it did not produce firmer prices or wider participation. It is too early to call this sustained accumulation. From a technical analysis point of view, Nifty ended near its widely watched 20-day average. The short-term trend weakened, but the broader market structure has not yet broken. The main external risk remains oil. United States-Iran talks are stalled, and further tanker attacks kept shipping risk alive over the weekend. A renewed rise in crude would increase pressure on India's import bill and inflation outlook. Next week's test is whether banks and market breadth recover. If they do not, a low volatility index may continue to make the market look calmer than its underlying participation suggests. This is market analysis and education, not investment advice or a recommendation to buy, sell, or hold any security.